Hi, think let's just wait for some minutes. Can you see my screen?
Yes, we can see your screen.
The slides?
Yes, we can see them.
Yes, we can.
I think let's just wait for 2 minutes. If not, we can start. 2 minutes, so we can start at 10 past. Okay, I think we can start. In the interest of time, let's just start at 10 past. I'm just trying to sort out. I think, okay. Shane, just confirm if you can see me clearly. Shane, how can I stop my notification for the email?
Let me just quickly check that for you.
But can you see me clearly? Before I start.
Just tilt your screen a bit, make it a bit straight so that we can be able to see your face properly.
Tell me when it's fine, because I'm just changing. Can you tell me when it's fine, Shane?
Yes, I'll tell you. Yeah. Oh, it was better where you were. Okay.
Like this? Huh?
Yes. No, go back a bit. Yeah.
Okay. All right. Okay, so let's start. Let me just share my screen quickly. Okay, welcome everyone to, am I audible?
Yes, you are audible.
Okay. Okay, welcome everyone to our webinar today. I know this webinar as well is being live streamed, so I know there are other people watching live online on our platforms. Thank you for joining in for today's webinar. I have seen that my picture there is not mirrored correctly, but it's fine. So I'm just going to go through the objective of today's meeting or today's webinar. It's tax readiness, and we want to quickly understand what is it that we are going to be talking about. So just as an introduction, my name is Molen, because I'm the managing director of Brendmo Chartered Accountants. We are tax practitioners, and we have dynamic professionals within our firm that service our clients. And we actually live by the mantra accountability partners, because we believe in being accountable and helping our clients to succeed in number of ways. So our services, we offer various services. We have our secretarial services, which is the company registrations, your company amendments. Like for now, there's beneficial ownership registrations. We busy dealing with that as well. We offer consulting, which is very key and one of my core responsibility within the firm to develop business and performance management processes for the clients that we service. Because a company cannot sustain itself when the processes are not at par, and actually it's prone to fail if there are no performance management. How do you check where you are as a business in terms of your KPI? So our consulting division is actually the one important division that is helping a lot of firms and a lot of companies. We also do audit and audit readiness, and we have recently launched an internal audit division within our company, where we are busy with internal audit services. We offer internal audit services as well. We have payroll and some HR-related services, tax services. We're dealing with tax disputes, tax opinion, individual for both individual and also companies. We also offer your accounting and your bookkeeping services. So the objectives of today's seminar is to understand what tax readiness is. The topic on its own is very broad, and we want to understand what is tax readiness. And we also want to look at overview of the South African tax systems and the tax compliances for businesses. We're also going to touch on VAT readiness and the employee tax and your corporate income tax. And we're not going to be able to touch on detail or to touch more on tax planning and strategies, but that's our next seminar that we're going to run, because we believe that tax planning and strategies is something that as an executive or as a business owner, you need to be able to know, so that you reduce your tax bill as a company as well. And also in the next webinar, we're going to talk more about the tax planning and strategies, as well as dealing with tax disputes or audits from SARS, because recently people are receiving SMSs, they are receiving threats, and SARS is now very good when it comes to communication, to its communication. So we are going to be running a webinar as well, going into detail on how to deal with any tax audits and disputes as an organization. And I'm sure you are going to gain clear understanding of your second provisional, actually all your tax types, and being able to understand why is it important to stay compliant as a business. So just maybe before we start, we can run a poll to just understand who is who. If you are on our platform, you can just comment as well if you are watching this webinar. Are you a business owner? Are you an accountant? Are you a CFO? Or none of the above, so that we can just understand our audience. So for the people that are on Zoom, because somehow my poll, when you're running a poll, it freezes. So you are welcome to just chat to the person who is with the name Brendmo there, who you are in terms of that. To say I'm a business owner or something like that, so that we can just understand our audience. Okay, so you have put in the poll. It's fine. Okay, so we have 50% business owners, as well as 60% is actually accountants, and 50% business on 40% business owners. So I think that's fine. So if you are watching this webinar from our platforms, please just drop a message as well from there. Okay, so let's get into the business of the day. What is tax readiness? So the word readiness, it actually means that you are prepared for something. So for me, tax readiness is the ability of a taxpayer, whether individual or corporate, to understand the important information on the or on the obligation and responsibility that you have towards your tax issues or towards SARS, and also understand the process that you need to follow to adhere or to fulfill that obligation. So tax readiness is your ability as a taxpayer. So remember, taxpayers are individual as well as companies. So your ability as a taxpayer to understand the important information regarding your obligation. So it's very important. I hear people say, no, my accountant didn't this. Yes, accountants are there to assist, but as a taxpayer, you need to be able to understand. You have a general. You should not do a tax degree to understand, but have a general obligations that you have towards the receiver, and so that at least you'll be able to know what is it overall that you are required to do as a taxpayer. So for me, that's tax readiness. Then what is it? So we now want to talk about the overview of the South African tax system, because you need to understand what are the different types of tax that you have within the South African context, so that at least you know and understand what is it that is required as far as each different tax type is concerned. So for example, we have your corporate income tax. I'm going to talk, I'm going to highlight more information around corporate income tax. You also have the VAT, which is a very important tax, and that is often misunderstood by clients. VAT, it gives a lot of people headaches because if you don't prepare for it, and you will not be able to have the cash flow to pay for VAT as well. It's a very important tax. And you also have your employee taxes, which is your pay as you earn, your UIF, your skills development levy. So those are the types of taxes that are applicable to businesses. There's dividend tax, capital gains tax, all those type of tax. But I think today we're going to focus on this core three, the three taxes. So if we look at corporate income tax as well, we're going to look at the provisional taxes around that, because it's broken into income tax and two first and second provisional tax. So in terms of VAT, returns are due on or before the 25th day of the month, while the payments are due on the last business day of the month. So this is the general information that as a business owner or as an accountant or as a CFO or as an executive person who is responsible to oversee and look at the company's books need to know. So if you just scribble, even on your calendar, returns are due for SARS, for submissions on the 25th, and for payments on the last day of the business, on the last business day of the month. And employee tax as well, they must be paid within 7 days after the month end, during which the amount was actually deducted. So this information help you to plan ahead. And corporate income tax, we're going to talk more about that. So tax compliance for business, there are key things to stay compliant with SARS regulation, so that you need to be aware of. Remember, we said this seminar is tax readiness. How do you know what you need to do for you to be ready? In other words, so the key things to stay compliant with SARS regulations: ensure your record keeping is in order as per Companies Act requirements and best practice. Recently, or last year, not recently, last year we actually, as a firm, we were dealing with a company that was audited for 3 years back, you know. So if the record keeping is not necessarily not in order, it's going to be difficult, because per Companies Act and also SARS requirement, you need to keep your records for the last 5 years, because SARS can just go back and open any year that you have actually submitted and audit you. So this is very important for you to be tax ready at any given time. Keep your records in order and ensure that you are implementing best record keeping procedures. As accountants, I think in our last seminar, we also spoke about the fact that accountants get the accounting softwares and systems on a huge discount. you can actually ride on that as a company. So should you need that, you can actually call us and we can help you and assist you so that your record keeping is in order. So you also need to submit your tax returns on time. It's very key. Understand the due dates and timelines in general. Just understand the key due dates and timelines of all your tax types and understand the documentation and the process required for you to actually be compliant. And one thing that is very important that I always tell to many people, or especially many business, to say some penalties, whether they are fixed or not fixed, of non-submission of tax returns, I call them wasteful expenditure. With the tough economy that we are in, you can't afford to even pay $250 for penalties for non-submission, of which you can actually, it's something that can be sorted out before you can pay penalties. So understand, you need a broad understanding of non-submission penalties that actually can range from 250 to 6,000 per month. Can you believe that you can actually be able to pay those taxes? So I just want to run a poll again. How confident are you? How confident are you about the upcoming taxes? So we talk about, we are in February. February is a very important month in South Africa because that's where the year end for individual is, and the year end for most companies, although the company's year end depends with the year that we have selected, but many people in South Africa select February. So how confident are you with your tax filing? As an individual, you can, if you're on our platform as well, you can just also. Okay, so I'm seeing that 50% are saying I'm completely prepared, which is good. It's now 43%. The 29%, they are still gathering some documents. Others are saying I haven't started gathering documents yet, 29%. So 29% still in the preparation phase of making sure that you are preparing. Okay, no, that's fine. I hope this seminar is going to help you to get prepared for that. Okay. Okay, so remember we spoke about the different tax. We have income tax, we have VAT, we have pay as you earn, but I want to start with VAT. The reason why I'm starting with VAT readiness is because VAT gives a lot of people headaches, because it's a tax that will require you to keep records and to track your expenditure and to make sure that you are buying wisely if you have VAT vendor. So VAT is a consumption tax placed on products whenever value is added at each stage of the supply chain, from production to the point of sale. So an element of tax is added from the point of production to the point of sale. So the standard rate in South Africa currently is 15%, and it's applicable to most goods and services. So if you are a VAT vendor, it means that you would have met the registration requirements either by voluntary or by compulsory. So business with an annual turnover exceeding 1 million must register for VAT. I've noted a lot of people who trade up to 10 million, turnover without registering for VAT. It's a matter of time when you be caught by SARS and you won't like the penalty. So it's very important to note that once your annual turnover, it's a legislation requirement. Once your annual turnover is above 1 million, you don't have a choice. You have to register for VAT. And voluntary registration is also possible for business with turnover below the threshold, but exceeding 50,000. So if you are not necessarily on 1 million, but circumstance beyond your control, let's say for those that are dealing with big companies, some big companies will say, no, we want to deal with VAT vendors because they want to claim whatever they are purchasing from you. So you won't have a choice in that circumstance, and you will need to register for VAT, which is a voluntary registration. So those are the requirements for VAT registration. It's either mandatory or voluntary. So many people, they don't want to register for VAT because of the cash flow issue. But remember, you don't have a choice. If your turnover is 1 million and above, you need to register for VAT. So let's look at the VAT implication for business. So understanding this as a business is critical, because when it's time now for returns, you won't cry for accountants to make it work. You know, some people be like, hey, can you please make it work? My VAT is too much. And you're like, how can I reduce it? And, you know, as accountants, and accountants, and our values as well, integrity is very core to the process, to this profession. So you need to understand input VAT. This is the VAT paid when you purchase something for your business, which means your expense. And this you can claim back from SARS. So remember, we are talking about tax readiness. So understanding that you can claim something from SARS when you purchase, it enables you to make good decision when you are purchasing. So don't purchase anyway. If you are VAT vendor, go and purchase from people that are also VAT registered, so that you'll be able to claim that VAT that you'll be charged. Because if you purchase it from someone who is not a vendor, VAT vendor, you're not going to claim that expense. So whatever amount that you would have incurred, or that you would have paid in purchasing those stuff, you'll be able to claim it back. That's your input VAT. So it's very important. It's tax readiness. So this is VAT readiness. So for you to be ready for VAT, make sure you are conscious when you purchase it at shops like Macro. Give them your VAT number, so that at least it reflects on the receipts. Or even when you're dealing with other shops or other companies, give them your VAT number, so that at least whatever you purchase from there, you'll be able to claim back that VAT. It's very, very important. So output VAT, this is the VAT charged on your service, on your goods sold. So when you're a VAT vendor, you can't afford to say, we had an issue with another client saying, no, but how I am a VAT vendor, but I don't want to charge VAT. How does that work? So, you know, as accountants, we meet a lot of things. You're like, okay, how does this work when you're a VAT vendor? So all your services, unless that service is exempt, you are offering an exempt supply that I'm going to talk about briefly. So all your services that you are offering, it will have VAT, which we call VAT output. And this is the VAT charged on the goods. So every time when you're registered VAT vendor, make sure you inform your clients, I'm now a VAT vendor. Therefore, it's not an increase in price. Therefore, you need to be able to increase, to put in that 15%, because basically you are collecting it on behalf of SARS, which is very important. Business needs to file VAT returns usually biannual and pay any due VAT or claim refunds for excess input VAT over output. So what happens is when you have during the month, or depending on your period and your category, you have to submit VAT either monthly, after every 6 months, or yearly, or depending on your category, or after every 2 months. So what you need to do now is to say, how much VAT output from your sales did you make, and how much VAT input did you from the purchases that you've made, and you need to pay to SARS the VAT due, or you need to claim if you purchase more than what you have sold. So that's the return that will be done for your VAT return. So it's very important to understand that, so that you can make clear decision, who are you going to purchase your stuff from, and you need to be able to make sure that your clients you are charging VAT on your invoices, because you are just collecting on behalf of the receiver. Okay, so we have actually decided to summarize key issues and challenges that we face around VAT, so that at least you are ready from this seminar. We're saying it's tax readiness. So record keeping, maintaining accurate and comprehensive records of all transactions is essential, but can be challenging to some. That's why we come up with methods and means. Like, for example, at Brendmo, we have our client portal. So when you are our clients, you have your sort of your server, right? where you save in your documents. It's a very, very, very important record keeping. And apart from using your normal accounting system, your QuickBooks, your Xero, etc., which helps you for record keeping, we have that as a plus, so that at least your records are kept well and you won't have issue. Because VAT is actually one of the taxes that is mainly audited by SARS. Why? Because remember, it's as a business, you are just a middleman collecting on behalf of. So SARS doesn't want businesses to receive refund or to underpay, because if you are the one who is selling and you have put VAT and you don't declare that VAT, the person who bought your service is going to claim it. So the receive of revenue, we have some losses there if they're not careful. That's why VAT is audited, and they always audit VAT. So you also have VAT on import goods. You need to understand the implication of VAT on imported goods and ensuring compliance with customs and excess duty. And we also have certain goods that are exempt. I'm not going to get into detail because it will get technical. Exempt supply, certain goods and services like financial services, residential rentals are exempt from VAT. So that's why I'm saying, unless if you are offering those kind of services, you are still offering VAT, those services, but some of them are exempt. So you will not be able to charge VAT on them. So it's very important to understand the common issues and the challenges that you can have. So you need to understand, out of my services that I'm offering, which one are exempt, which one are zero rated, and which one are standard rated. So you need to ensure full compliance with VAT legislation. It's actually key to avoid penalties and interest. Like what I said, penalty and interest, I call them a wasteful expenditure. So you need to actually seek professional advice so that at least you can see how you can get help from that. So that's VAT in a nutshell. And how you can be ready for VAT, make sure you understand your services, make sure you do key decisions on who are you going to purchase your stuff from, and make sure you keep your records intact, because VAT is often audited. Then let's go to your second tax, which is your employee tax. So we call it, we have pay as you earn, we have UIF. So pay as you earn is a withholding tax. I always have people to say, no, I don't want to pay as you earn for my employees. So remember, if you are earning, or someone say, why can't my pay as you earn be reduced, something like that. So remember, a pay as you earn is a withholding tax that you as an employer or as a business, you should deduct from your employee's salary or wages before payment. So obviously the rate that, or how much you're going to withhold, depends on the salary bracket that your employees fall into. So it's very important. It's an obligation. If you are an employer, if someone is working for you and within a certain threshold, I think it's about 7,000. Now, if someone is earning more than 7,000 or so, I'm not sure of the correct right now. So, but our payroll division can actually help you to say, no, this one needs to be on pay as you earn, and you need to withhold the tax there. So if you're an employer, make sure that you are deducting that pay as you earn from your employee. So your cost to company, make sure you deduct that and you pay over. That's your pay as you earn. So, and you also have UIF, which is an unemployment insurance fund, which is insurance. Also, you need to actually subscribe to our YouTube channel. There's a video that we are going to, an interview that we did. Why is insurance important for business? For business in general, and the types of insurance that you need, whether you're a small company or whichever size. So UIF is an insurance fund. So your contributions are made by both the employer, the employee, each contributing 1% of the employee's salary up to a certain cap. These funds provide short-term relief to your workers when they became unemployed or are unable to work. So it's an insurance. So it's one of the certain type of mandatory insurance that you need to have if you have employees within your organization. Then you have our SDL. Employers are required to pay SDL if their total salary expenditure exceeds, I think it's about 500,000, a certain threshold. The levy is calculated as 1% of the total salary is paid to the employee. So this is for help in skills development levy. So this is the money that your sitters will be, SARS will distribute to different kind of sitters. for skills development, your facet, your different types of SETAs that we have in South Africa. So you need to have reliable payroll system, and you also need to seek professional advice to navigate the complexities of the employee tax. So it's very, very important to have systems as a business. Like what I said on one of our services, I'm very core in setting up systems for businesses for growth of those companies. Then the registration and compliance requirement for your employee tax, employers must register with SARS. It's mandatory for your pay as you earn, as long as you have employed people, and UIF as well, as long as you have employed employees within you. And you need to regularly submit your returns, and payments are required for pay as you earn and UIF and SDL on a monthly basis. You need to ensure you have accurate deductions and timely submission to avoid penalties and interests. You need also to maintain detailed records of all employees' compensation and tax deductions. This is very, very, very crucial. So I think you understanding on all taxes that we have spoken about now, record keeping you cannot do away with as a company. So it's not something that you are going to say it's a luxury. It's actually a need, and it's a need, not a want. In other words, so common issues to note: miscalculation of employees. So incorrectly classifying your workers can actually lead to incorrect tax deductions and liability, which actually can cost the business. Remember, if you are incorrectly calculating your tax, you might be overpaying on your pay as you earn, because you are not correctly calculating it. And also what is key, which our payroll division is actually busy doing, is understanding the benefits and allowance, so that you can reduce. If you can reduce, remember tax planning is legal. You can reduce your tax by understanding the benefits and the allowances that you need to put in, and the tax implication of those, so that at least you can actually reduce your tax bill for your people and for yourself. Yeah, so that's it for pay as you earn. It's very core to understand who have to register for pay as you earn, when do you have to register, and what are the tax allowance and benefits. How do you restructure your payroll in actual fact for your company, so that at least you reduce the tax bill, which actually affect and increase your people's net pay, and also even reduce your cash flow if you really structure your payroll. Very key as well. So let's go into the corporate income tax, which is the income tax of corporate income tax. So corporate income tax in South Africa is a tax that is imposed on the income of a corporate entities, such as companies, and is a significant part of the country's tax system. So we are going to look at the key aspects of corporate income tax here in South Africa. So people confuse corporate income tax with the VAT. Someone like, why am I paying tax again at year end? But I've just paid my VAT last 2 months. It's two different things. So remember, corporate income tax is tax that you pay on your income, taxable income, which is what is taxable income? We call it your income, your revenue, your sales, less your expenses, which are deductible. That's why tax readiness seminars like this are very important, because you need to understand, how do I reduce my tax? What are form of expenses that can be deducted and reduce your tax? So it's very important to understand corporate income tax is different from VAT. So these are the current tax rates. As a company is 25%, 27%, sorry. It was reduced in last year, and starting from 1 April 2020, companies pay 28%. Companies now pay 27%, unless you are a small business corporation, which is very, very key. That many accountants, some accountants, they don't really advise the clients on that. You need to see, do you qualify for small business corporation? Because this is like an incentive. I'm going to talk about it briefly when we talk about tax planning strategies. So if you're a small business, you need to check if you do qualify as a small business corporation. So if you are a small business corporation, you pay tax for taxable up to taxable income of 95,750. You don't really pay tax on that. That is zero. But if you don't apply that in the system, you find yourself paying 27% of 95,750. So it's very important to understand, have a general understanding, and obviously choose your accountants wisely so that you'll be able to get the benefit of the knowledge, because there are a lot of people who call themselves accountants out there. So please make sure you know which board does your accountant belong to. Do they have the qualifications so that you don't end up paying? Imagine when you were not supposed to pay tax, but you're paying 27%. I don't know, what is 27% of 97, 95, 750? It's a lot of money that would have wasted just for not knowing that whether you qualify as a small business corporation for that incentive for small business. So those are the rates for small businesses. If you have 95 to 365, you pay 7% of taxable income above the 97. Can you see it's like an individual table, tax tables, sort of. So you don't necessarily pay tax. So you end up not paying tax sometimes if you're a small business. If you're still starting, because starting a business is hard and you can't. So SARS come up with these incentives to help businesses to be able to be able to enjoy those tax incentives. So it's very important. Those are the rates for small business. So this seminar, remember, it's tax readiness. You need to be able to know what is it that you can implement as a business, whether you are a small business or not. So small business, like what I said, enjoy more favorable tax rates on a sliding scale, depending on their taxable income. These rates are designed to support small business growth and sustainability. So it's very important to understand that as a small business, there are a number of privileges as well. There's the micro business as well, turnover tax, that is there, that you need to find out and have a consultation to say, where my business is like this and where am I? So if you need a free consultation, 30 minutes to really understand your business, go to our website and book us 30 minutes free, no obligation. So we can tell you to say, no, this is, you can do this and those kind of things. And another type is capital gains tax. Companies are also subject to CGT, capital gains tax. What are capital gains tax? These are taxes on disposal of assets. A portion of the capital gain is included in the taxable income and tax at the corporate tax rate. So if you dispose of assets are your equipment that you use within your business to be able to produce whatever you're producing. If you sell, let's say you have your laptops, your furniture, and all those kind of assets that sits in your balance sheet, you'll be able to, there's a capital gains tax element there, or any other assets within your company. So that will be a capital gains tax. We also have dividend tax and dividends issued by South African resident companies to shareholders. So it's very, very important to note that if you dividends issued by South African resident companies to shareholders are subject to dividend tax at a rate of 20%. So this tax is withheld by the companies paying the dividend. So most people, I know, I think 60% were saying they're entrepreneur or business owners, something like that. So you need to know that you're a shareholder within your company. So you need to understand the dividend tax component of it. So remember, if you are paying, if your company at the end of the year, after paying all taxes, there's lying around profit, you want to pay yourself dividends, you'll be able to, the company should withhold 20%. But there are a lot of technicalities around that. So you need to consult to say, okay, to what extent and what is the process and the returns around that? How do you declare that? So that's dividend. So dividend tax is a tax. Tax resident companies, if they pay dividends to the shareholders, they have to withhold that 20% and pay it over to the receiver of revenue. So it's very important that as an individual as well, it's very important to say, as a company owner, do I pay myself dividend or salary? I think we on our YouTube channel, we did a video around, should I pay myself tax? Should I pay myself dividend or salary? So that those options, and you need to understand those options. And also tax incentives. You need to understand the tax incentives. There are various The South African government offers various tax incentives to promote investments in certain industry. Like example, if you're in research and development, if you are to actually uplift the economic activities within the country, the government has come up with those incentives. So the incentives can reduce your tax rates for qualifying companies, obviously. So if you're in research and development, you need to understand that, do you qualify for the tax incentives? So I think in our next webinar, because 1 hour is short, we're going to talk about tax strategies in detail. So I'm going to briefly talk about that before we just conclude. So on corporate tax as well, remember we talk about income tax, which is your sales less your expenses. But however, how do you pay that to SARS? You pay that in two, we can call it 2 installments. So one of it is the provisional tax. So provisional tax is actually a method. It's not another tax, right? It's a method of paying no more tax in advance for a particular year of assessment. So the reason why I'm saying in advance is because the year has not yet ended. But SARS say after 6 months, check your books. What profit do you have? And pay over that, right? So it's like so that's why it's a provisional tax. It's you are estimating that this will be my tax at year end, but you can't pay at year end because also the receiver want revenue, so they won't allow you to wait for the whole year to end before you pay something. So that's why it's distributed in 2 equal payment, first and second provision. So all provisional taxpayers are required to make at least 2 provisional tax payments during the year. So the second provisional tax must be made on or before the last day of the taxpayer's year of assessment. That's why I said February, it's a very important month. So I see many clients, many people, SARS is enhancing its communication. So many people are receiving SMS. Remember, your tax second provision is due and your tax return is due. So your tax return for 2023 year is due February 2024, right? So which is your final tax return. You might not pay something if you have already paid your provisional tax in order. Remember, you would have paid your first and second provisional tax. So it's just a return to confirm that whatever you have paid is correct by doing that income tax return, detailed income tax return. So the second provisional tax must be paid on before the last day of the tax years. So like this February, what is due is your 2023 income tax return, as well as your second provisional tax for February 2024. Very important. It's technical, but it's very important for you to know that. Provisional taxpayer can make a third voluntary provisional tax. Let's say you see that you have underestimated. So SARS give you 6 months after year end to do another return so that at least you correct yourself before they catch you. So if the company year end is February, like what I said, the tax is due within 7 months after that year. In other cases, is within 6 months. So it's very important to know that all companies are provisional taxpayers. You can't choose that I want to be a provisional taxpayer or not. All companies are provisional taxpayer. And it's an estimate of your annual tax liability when you're doing your provisional tax, 2 of them. So when you hear accountants say, no, we need to pay provisional tax, it's that estimate from your management account. So keeping your books is very important. So based on your income earned from March of that previous year to February of the current year, and reduced by the first provisional tax paid in August. So because if your year end is February, your first provisional tax is in August, and this February you are doing or you are paying your second provisional tax. So why understanding? It's very important to understand these deadlines so that you can avoid penalties and interest charged for late payments, which I call wasteful and fruitless expenditure as a business, because you need to be able, I know wasteful and fruitless expenditure is a term that is always used in government entities, but I say as long as you are running a business, you can't afford to have wasteful expenditure. So you need to ensure accurate tax estimates for that year. Make sure you have put in all your deductions that need to be put in. You need to manage your cash flow effectively to meet the obligation. So when you receive your management accounts or when you receive your books, you need to be able to ask, well, how am I looking in terms of tax? So also you need to avoid potential audits and complications. Audits are very important, are very costly. So all audits that we have done and accountants, because it takes time, you need to look at the case. It's very, very expensive. So you can't afford by not planning to your tax properly or having accountability partners within with you or that assist you, and you end up having the audits and all the penalties. So you need to filing your payment process. These are the processes. You need to ensure you calculate correctly. The payment options is online, penalties for late filing or underpayment. So some people, there are two penalties for late filing or non-submission, and also understatement. People say, no, let's just say I've made 3,000 when you know that you have made 6 million. So when you are caught up, which they always do their audits, SARS, when you are caught up now, you are going to understate you are going to pay a penalty of what we call underpayment penalty. So it's very important to be able to file correctly. Okay, so just in conclusion, because of time, this is the next seminar that we are going to have on tax planning and strategies. So this is very important as a business owner, or as an executive of a company, as an accountant of a company as well. So you need to understand the tax structures of an entity. I think I spoke about, are you a sole trader? What are the tax implications on that? So I'm not going to get into detail because of our time. We are left with about 7 minutes into this webinar. So you need to be able to understand the tax structures. When I mean tax structures, the structure that you have chosen, the vehicle that you have chosen to do your business in. If you are a trust, the tax implications as a trust are different. If you are a company, the tax implications are different. If you are a partnership, the tax implications are different. If you are a sole trader, the tax implications are also different. So you need to understand your company structure and the related tax implication for that particular structure. And also you need to understand maximizing deductible expenses, So some people will just swipe using their personal for the company, for the company expenditure. So you end up not reducing your tax because that thing you forget to record it in the company books. So you need to be able to maximize your deductible expenses. So when I mean deductible, there are other expenses that are not necessarily deductible in a company. So let's say your tax deductible, right? You can deduct them to get your profit, but for tax, some expenses are not allowed, like your penalties. If you didn't submit your tax, then when you're doing your return, you are saying, I also incurred penalties, so deduct it so I can pay less tax. So those are not deductible. So you need to understand the max, what are type of expenses that you can utilize as a business to maximize your deductible expense to reduce your taxable income. Also utilizing tax incentives and credits. We spoke about research and development incentives. You spoke about incentives for small business corporation. We're going to run another webinar talking about just tax planning and strategies. And we also the capital gains tax planning. And actually, even also the how to do tax planning, really. So let's say, for example, this year, towards year end, your invoice, should you put it on the 28th of February or on the 1st of March? You get what I'm saying? So because if you don't plan well there, you have a huge amount that you bill now, and the person is actually, or the company is going to pay in April, and you bill it on 28th February. It falls in this year, and it falls into the tax for this year. So why don't you just raise the invoice on 1 March, defer it to next day? It's illegal. So how you are going to record the revenue? So that's what we call tax planning, which is very, very legal to reduce that. And we also, in the next seminar, we are also going to deal with tax disputes or tax audits. How do you, if you are being audited, what is it that you need to be aware of, what you need to know as a business? So I think that's it for the for today, we're just going to run a poll to say what type of business do you own? Is it small, medium, startup, or it's a franchise, or it's a sole trader? So if it's sole traders also fall into small business, which size of business are you? What type of business do you own? Okay. If you're on our platforms as well, you can just, or if you're on our live platforms, you can just comment so that we can see what type of business you want. Okay. Yeah, so I say hands up to most startups that are in here. Because growing a business, if you start it on a wrong foot or wrong premises, you're going to end up trying to solve issues without growing the business. So it's very important. 57% are startups in here in this seminar, which is very, very important. I say hands off. Is it hands up or hands off to you? So that's very, very important. So, and we have 43% who are small businesses. It's very, very important to be able to, it's very important to know and understand this as a business. Thank you for that. So just in conclusion, before I, it's very important to know whoever is dealing with your taxes is a registered tax practitioner with a recognized professional body. Just go to the bodies that are just coming up these days. Then you need to know that the body is reputable or someone doesn't lie to you that they belong to that. And you also need to know the qualifications of the individual helping you. So in conclusion, I think today we spoke about different tax types, your VAT. We also spoke about your pay as you earn your income tax, and I touched also on second provisional tax in the deadline. Like this month, it's a very busy month for accountants, for us. So if you haven't yet done your financial statements and your things are in order, please call us so we can help you and assist you on time, because February is an important month. Even from individuals, well, I feel like I'm going to run. I think we're going to release a video saying between now and February year end, how can you reduce your tax? How can you get a refund? You know, so that at least you can invest in your tax-free. How do you plan your tax between now and February so that you reduce your tax for this February, before February and February, March. So it's very, very important. So I just want you to keep on remembering that you are not alone. We are here to help you and assist you as your accountability partners, as we are living by that mantra. That's why you see we have a lot of resources on our platforms to help you. So I'm just going to give like 5 minutes and 3 to 5 minutes. Any questions? If there's anyone with a question. Okay, can you also check the charts for me? There's Shane, I can't see.
Yes, I'm monitoring the chats.
Okay, so I think if there's no question, I think that's fine. If there is, if I can't see you, can you just unmute yourself and ask your question? Okay. So I think in the absence of questions, that's it for today. You can get hold of us on these numbers, very important, our phone, our WhatsApp numbers, and help@brendmo.com, and our website and our address. Should you want one-on-one free consultation session, it's the next step that you can do to help your business grow. And it's actually an important step that you can actually do to just quickly advise you on what you need to do. 30 minutes, book us, then one of our consultants will be with you on the line so you can get that help as you are growing your company. Thank you. Hope you get helpful knowledge from this presentation, and thank you very much for attending.
Thank you, Marlene.
Thank you.